Good morning, all. Welcome to today's session of Inuka Enterprise training. This is a KBA initiative where we train SMEs on financial literacy. We have trained about 60,000 SMEs on how to handle challenges in your businesses that you run every day. Today, I will be hosting this session for this training. If you just joined, this session is being recorded, and the recordings are going to be available on demand. You can always demand for them, and then they will be sent to you. And again, the slides that our speaker for today will use will also be available for your use and for references. In case you need them in future, they will be provided. My name is Patrick Kefue. I work as a senior personnel in Kenya Bankers Association in the Technical Services Department. And when we talk about what is Inuka as a program, Inuka is it's about broadening the literacy, financial literacy for SMEs. So currently, I hope you find this session helpful, and the training will be relevant for your daily runnings of business. Today, our speaker is Anne Mureithi. She is a compliance expert from Stanbic Bank, and she will be speaking on the key policy and regulation requirements for SMEs to enable compliance. Welcome, Anne, and thank you.
Thank you so much, Patrick. It's an honor being here, and I am very pleased to be here to share on the key regulatory and policy requirements for SME compliance. By the end of this session, I hope you will understand how to make your interactions with the bank a lot more smoother. And you'll also understand the regulatory environment in which banks operate. And as a result, you will see the trickle-down effect on you as the customer, as our SME customer. So just by way of introduction, I've already been introduced. Anne Mureithi from Stanbic Bank. I am a compliance specialist. And what I will be taking you through these key regulatory and policy requirements for SME compliance. And what we'll be looking at, we will be looking at right from onboarding all the way up to whenever you're doing your transactions. What are these things that you need to be aware of as our customer? This is just to ensure that every time you walk into a bank, you do not feel frustrated. When you're asked for information, you get to know why this information is being requested for. So we're starting off with the table of contents. This is what we're going to discuss. The first one will be the regulatory landscape for financial institutions, and the specific focus will be on banks. Then we're going to look at the regulatory impact on SMEs. What are these challenges facing SMEs in accessing financial services? Know your customer. This is a phrase that I am sure you've heard by now. Every time you go to the bank, you're told, there is this information that is required because we need to know you. So I am going to explain why do we ask for all that documentation. Whenever you're making your transfers, you're trying to import goods or you're trying to export goods, or you want to send money from your bank to another bank, then there's a whole list of documentation that is expected of you. And the thing is, I'm going to explain to you why we require all that documentation. Then we'll have a brief look at the Kenya Banking Sector Charter. I will get into details on that. And later on, we will close out in checking how you're going to ensure compliance. So we can go to the next slide. So as you can see the slide, it shows the different regulators who directly impact the bank. And what you will notice is that as a result, the same is going to trickle down to you, our customer. So the banking industry is highly regulated. And this is because we are entrusted with the public money. So we are prudentially regulated. And basically, when we talk about prudential regulation, here we are talking about the legal framework, focused on the financial safety and stability of institutions and the broader financial system. So if you look at that particular slide that is up there, we have the Central Bank of Kenya, who is our primary regulator. Then we have Office of the Data Commissioner and GDPR. This is the General Data Protection Regulation. And this would impact a financial institution where we have clients who are from Europe. And then we have other legislations, all laws that have been issued by the county governments and the national governments. As a bank, we have to ensure that we are compliant. And then we have what we call the Kenya Deposit Insurance Corporation. And then we have the Financial Reporting Center. So the Financial Reporting Center is actually very key in this discussion that we are going to have here today and the presentation that I am making. Financial Reporting Center is where we get to, we get some particular laws, especially on proceeds of crime and anti-money laundering. And we make particular returns on a weekly basis and every so often to that particular regulator. Then we have the other international standard setters. This you possibly may not have heard of them, but this is where it gets a lot more interesting. We have certain entities, international organizations, who advise the bank on what is expected. The thing is, we need to ensure that as a financial institution, we have a lot of responsibility to ensure that the banks and financial institutions are not used as conduit for illicit flow of funds or fund terrorism in whatever way. So these institutions, we have what we call the United Nations Security Council. Then we have OFAC, which is the Office of the Foreign Assets Control. And then we have our correspondent banks. Every time you're making a transaction from one country to another, we will use what we call correspondent banks. And correspondent banks would usually come with a lot of expectations in terms of the kind of documentation that is required when we are moving money from one jurisdiction to another. Therefore, you will see once in a while the bank will reach out to you, or your relationship manager will reach out to you and tell you, you are sending money to another country, but for one reason or another, there is some additional information that is expected. Now, that could arise from two areas. One, when the back office was reviewing the transactions, they noticed that either the information provided was not sufficient, or secondly, the correspondent bank has come back with queries and they've said, we need additional information about this transaction for us to be able to pass it. And what you will see is that there is also something called sanctions, whereby as a financial institution, we are not supposed to remit money to persons who are sanctioned. And what do I mean by sanction? These are persons or entities that are not, that have been sort of blacklisted. Just to use the simplest language is that they've been blacklisted. A good example that I can give is Osama bin Laden. We, as a financial institution, we are not supposed to send money to Osama or to Al-Qaeda or to such entities that have been blacklisted. Therefore, all the transactions that go through the financial institutions have to be screened. And this is regardless of whichever method of remitting money you're using, so long as it's a wire transfer. If you're using RTGS, if you're using the SWIFT system, then we have to ensure that we do not facilitate terrorist financing. So this is an activity that we take together with the bank and the government and also international bodies to ensure that only clean money passes through the institutions. Next slide. Now that we've talked about the regulatory environment for banks, how does this impact you as an SME? first instance is about the know your customer, which I have just explained. So when we talk about know your customer, this is when the customer is being onboarded. So you've come in, you've said you're doing a particular business, you've decided you want to open an account with the bank, and therefore, as a financial institution, we are obligated to verify your identity. So you will share with us your national ID details or your KRA PIN. You're also going to share with us your registration documents. Once we obtain that, we are required to verify the information that you've given us is correct. And one way we do that is that we will check your identification details against the national database. We will look at your certificate of registration against the company's registry. We will look at the PIN that you've given us against the KRA portal, just to ensure that the person whom you're saying you really are that particular person. Hence, you see the requirements. But what banks have done is that we have digitized this over time. And you will find that the requirements, they've gone on evolving over time. And we are becoming more digital, and a lot of this information can be done on an online basis. You do not even need to come to a bank to open a bank account. So this is just one of the ways in which we're saying we want to make banking very easy to access to everyone. Another way this would impact you, the regulatory impact, is on transaction monitoring. So just as I've indicated, we have what we call the Proceeds of Crime and Anti-Money Laundering Act, whereby all the transactions that are facilitated by the financial institutions have to be screened. And we also monitor these transactions. So this is the work that I do at the back end, reviewing all the transactions that go through the bank, look at them, see if there is any transaction that is out of profile from what we understand from the customer. So when you come in as a customer, when you're being onboarded, and every so often, we will see the kind of flows that are coming in. For example, we see there's about 10 million shillings that flows through your account on a monthly basis. The day we'll see 100,000 Kenya shillings or 100 million, then we'll most likely come back to you and ask you to provide additional information, or just to understand your business has grown. So as a bank, how do we support you to make sure that even as your business grows, the bank is right there working with you? The central bank has also issued certain guidance notes and guidelines to ensure that, to guide banks and onto the kind of supporting documentation that would be deemed adequate whenever you are remitting funds. Then the other one is the prudential regulation. We have been issued with what we call the prudential guidelines, what we call the risk management guidelines. And all of these have a trickle-down effect on you as the SME, because what we do as a bank is that we look at all the laws within the country and also extrajudicial. We sieve that down, and by the time we are coming to you, the client, we'll have sieved down all that information, and we pick only the very pertinent information to enable you do your transactions as seamlessly as possible. And then we have what we call the banking sector charter. So this is a commitment, from the banking industry to entrench a responsible and disciplined banking sector, ensuring that we put you, the customer, right at the center whenever you are undertaking business activity. So whenever the bank is coming up with new products, we are coming up with new channels, for example, internet banking, or partnering with mobile network operators. We ensure that we have done this work, all the work that we've put together. We try to ensure that we have you as the customer right in the middle of it. And I will also give a lot more detail on the banking sector charter. Next slide. So if you look at this is some information that I got about the access to financial services. And this came from the Kenya National Bureau of Statistics, the Economic Survey of 2022. And what it shows is that access to formal financial services and products has grown from 2006. So from 2006, we have a lot more people accessing formal financial services. And by formal financial services, here we are talking about mobile money, or they've gotten into the formal sector of banking. And what you can also see is that access through informal providers, this is, for example, the Shylocks has also reduced from 6.1%, which was there initially, to 4.7%. And then we also have a number of people who are totally excluded. And now what we would want to understand is, how do we make, as a financial institution, we don't want you coming to the bank and feeling frustrated because of the kind of information that we are giving you. What we would want to know is, how do we continue increasing this access to financial products and services to ensure that you, as the SME, as the bank client, are able to enjoy a seamless service. Because if you walk into a bank and you're served well, or you log into a particular system and you're able to remit your money, send your money wherever it is that you would want to send, and you find that you find it a very seamless process, the better for you. And it means that even you will be able to call on a lot more people to be able to transact. We cannot understate the role of SMEs in the economy. So far, at least there are 7.4 million SMEs that are operating in Kenya. And the SME sector employs more than 15 million people. So this is such a huge, huge number. And it is necessary for us to, as financial institutions, to see how to make this process as easy as possible for you to be able to understand what are these requirements that you need to do whenever you're interacting with financial institutions. Next slide. So I will briefly go through the challenges that face SMEs in accessing financial services. And what you will notice is that in terms of these challenges, that face SMEs, one is difficulty in accessing finance. We have seen this time and time again, where you find institutions, either because of the high processing fees, their high negotiation fees, the interest rates are quite high. You're told you want to access a loan, then you must pay insurance for that. There's the legal fees, valuation fees. These are very high fees that you find ordinarily would make people shy away from accessing finance. The other one is regulatory issues. Now, from a regulatory perspective, we have seen, and we have a number of institutions, for example, the CAM, the Kenya Association of Manufacturers, they've come in and said that the number of licenses that are required for one to set up a single business is so high. This comes from the county government requirements, the national government requirements, and effort is required to streamline this and ensure that you have this, you have the registration documents and you're able to get them without having to pay, too much taxes left and right and all over. Therefore, when it comes to this, the regulatory issues, what are some of the things that can be done, to ensure that there is, because as far as the bank is concerned, we need, in our bid to understand you, if you're running a business as a financial institution, we are required to ensure that we understand what kind of business that you're running. So if you are running a school, for example, as a bank, we will ensure one of the requirements is that you will have to provide us with a letter from the Ministry of Education showing that you're certified to run that particular, or you're licensed to run that particular business. If you're in an industry that is regulated by whatever type of regulation, then it means that you will require that license from the respective regulator for you to be able to transact business with the bank. Then there is also lack of information and information infrastructure for SMEs. And by this, we are talking about the creditworthiness, of big enterprises. And you find that for established enterprises, there is a lot of information readily available. When you ask for audited financial statements, they are easily available. When you want to know, the flows, the management accounts, all that you'll be able to obtain. However, when you come to SMEs, that same information is not readily available. Either the institution, the company or the business is still very young. The business really has never had to be audited because of the size of business. And what you find is that when you're, as a financial institution, when we are trying to assess the credit worthiness of you, it becomes a bit of a challenge. But of course, there are things that, there are certain initiatives that are being driven to ensure that there is this lack of symmetry is done away with, and there is more available information. And banks use both your financial data and non-financial data to determine your credit worthiness. And then there is the insufficient use of information technology. We find that more and more, we have customers now who are opting to do their shopping online. Customers now opt to do their transactions through through their mobile phones, through internet banking. And therefore, what that means is that also as SMEs, there is need to catch up, and ensure that you also play in the same space so that you're able to meet the clients where they are at, your customers. We have to meet them at where they are at. The pace at which the industry is moving and technology is moving, everybody just has to ensure that we catch up. So next slide. So this slide was just a simple one. You're there, you're running your business, and you wish to, you either wish to expand, and the next key thing you're going to ask is, do I borrow or do I not borrow? And if you're going to borrow, are you going to borrow from a bank or do you go to a non-bank institution? And this will be very dependent on your needs that you have. Then if you decide to go to open an account with a bank, are you going to open a business account or are you going to open a personal account? And from practice, what we've seen is that we have, Kenya, we are a country of hustlers. So you find people who will sell things, as a side hustle from the boot of their vehicle. They do not have a registered business as such. And we find that this is one particular sector that has been left out on the regulations, and in terms of getting to know how to classify them, because they are not registered, and yet there is business that is ongoing. And we've seen, such where people open personal accounts and they conduct business using those personal accounts. That ordinarily would portend a problem for us, as a financial institution, because we would want a business to open a business account so that you're able to transact properly, because we are able to support you better when you open that business account, because it would have a lot more benefits, compared to a personal account. And what you will see, some of the things that that you're going to see is that you'll decide to possibly make your own money. You're going to have your own money. So when you want to borrow money, you can either use your personal savings or your retained earnings. Alternatively, you can go and use your short-term borrowing. You can use long-term debt, and you can also use new equity. This is as you continue growing and as you continue expanding in your business. And you find that ordinarily this long-term debt would be a last option. Not many people would want to go all the way to having new equity investors. But then, of course, it also depends on the direction that your institution is taking. So let's go to the next slide. So the next slide talks to know your customer. And I did touch on this Okay. Yeah, sorry about that. So when we talk about know your customer, what are some of these things that we are talking about? Please move to the next slide.
Sorry, and 1 second, I'm having a challenge with my machine.
Okay. Yeah. So anyway, I will continue. So when we are talking about know your customer, these are where we come and ask, what are these requirements that you need to open an account? And these have been laid out by what we call the Proceeds of Crime and Anti-Money Laundering Act. And in this one, the first thing that we get to see is that we have to establish and verify certain particulars for businesses and also individuals. So I did mention that whatever documentation that you give as financial institutions, we have to do a check, a verification, either through the government database, through if it is the PIN, the Kenya Revenue Authority, if the change is going to be done, if the document then needs to be is a company, certificate of incorporation, the same would have to be checked against the company registrar. And that also applies, right across the industry. If you're an NGO, are you registered with the NGO board? Those are some of the checks that we have, that as financial institutions, we are obligated. And this is part of understanding and knowing you as our customer. So for individuals, what we would require from you is your national ID, passport, or driver's license. I know one of this may come as a surprise, especially with driver's license. The reason why all institutions would emphasize on the national identity card is because that database we are able to confirm, but a driver's license, we really cannot confirm the details of your driver's license. Then the other one is, I can touch briefly, would be on partnerships. So when we talk about the partnerships, what you are required to share with the bank, as far as partnership is concerned, you need to tell us, to show us your partnership deed. You need to show us the registered address or the place of business. You need to show us your registration number, the full names of the partners. Who is this person who is controlling who has control over the partnership, and who are these persons, the natural persons who are behind this partnership. And also, depending on whether it's a limited partnership, also the unaudited financial statements for the full year. Then we have the account opening requirements for corporates. And this, as per minimum, this is what has been provided for as minimum. If you remember what I mentioned before, banks are highly regulated. And we have a lot of these things which have been set out by our regulators. And therefore, as financial institutions, we have to ensure that we comply. Because if we do not comply, the penalties are very heavy, on the financial institutions. You will find that institutions can be sanctioned by the regulator. I'm sure you've seen notices out there. For example, the central bank will sanction a particular bank and say that they are not allowed to trade. We can have our license withdrawn. Therefore, there is usually that need to ensure that all the information, at least the minimum information required by the regulators is included. And any other information that is required by the bank is to enable the bank know you a lot better. So from a company perspective, if it is a corporate, then we would require your certificate of incorporation. We would require your full name, and this includes the ultimate beneficial owners of the company. Who are these natural persons who are managing or controlling this company? Which is this, the financial audited statements for the last full year. And if you're a sole trader, your unaudited financial statements. And for PINs, so long as you're opening an account in Kenya in a financial institution, a PIN is mandatory. So this is under the Tax Procedures Act, which came up in 2016. At this point, there is no financial institution that would open an account for you if you do not have that KRA PIN. So you make sure that your company, if you have a company or a registered business, at least there is a KRA PIN so that just for us to ensure that we comply with what the regulatory requirements are. Next slide. So there is this this has been an area of concern for many clients when we are talking about supporting documentation. And whenever we're talking about remitting funds from one financial institution, one bank to another, or sending money out of the country, you want to import goods, you want to export goods or services, and you find that the bank will require, will ask for a whole host of documentation or information from you. As I mentioned before, we have what we call our correspondent banks. The correspondent banks, these are the institutions in which we've entered agreements with. So like a domestic bank will enter into an arrangement with another bank, for example, in the United States, such that whenever our clients want to send dollars all over the world, it is that bank that will help us with the clearance, because our customer here has Kenya shillings, but the money, when it's going to the US, it needs to reach there in dollars. So there is that intermediary bank which helps in converting the Kenya shillings, into the dollars, and to ensure that the money reaches on the other side in the currency in which it is supposed to reach. We have, so for us to ensure that there is adequate information that is captured whenever you're making that SWIFT message, or you're making that, you're submitting money, there is information that you'll be required to capture. And ordinarily, you will find this information in for example, if it is internet banking, you will find certain fields, and you will be told that some of those fields are mandatory. This is because the bank that is clearing that transaction for us is not going to clear until they make sure that all the fields, as they have stipulated, have been filled. And it is not a particular requirement by a particular correspondent bank. There are international standards in which banks we have to adhere to. Therefore, you will see that whenever you're making your wire transfer, the name of the originator will have to be put in. In this case, you find that the bank already knows you. That's why you've been set up, for example, on internet banking. So your name is already there. Your account number will have to be provided. What is this address, or your national identification number? So ordinarily, this is information that will go with the SWIFT message that is being sent to the other country. Then who is this beneficiary that the money is being sent to? Where is the beneficiary's account? And in the absence of an account number, a bank account number, then there must be a transaction reference number, so that we are able to trace the particular transactions. So and then for any transaction that is above 10,000 USD or equivalent in other currencies, then supporting documentation is required by the financial institution. This is one, for us to satisfy ourselves that there is that there is a transaction that is actually going on. There's an underlying economic activity. And number two, to satisfy our correspondent bank's requirements. So our correspondent banks will come in and tell us this, make sure that all these fields in the SWIFT message have been provided. Then let's get local. Here we talk about domestic supporting documents for cash transactions. In 2016, the Central Bank of Kenya issued a circular to all financial institutions, and this is banks. And what they were told and what they were advised, financial institutions were advised, is that every transaction, any cash withdrawal or cash deposit that is above, that is 10,000 USD and above, or equivalent in other currencies, there must be written statement from the customer confirming the nature of business activities. And the regulator, this is the Central Bank of Kenya, was very specific as to the kind of information that they require. So now, if you walk into the bank with cash above 1 million shillings, or we want to withdraw, you will be given a form and you're told to fill this form. So different banks have taken different approaches. Either they'll do it electronically, digitally, or you'll be given a manual form in which to fill in the information. And the specific information that the bank is required to fill in is number one, why is the large cash or deposit, the large cash deposit or withdrawal necessary? Why aren't you using electronic means? Because the government is trying to encourage people to go cashless. Therefore, this is one of the ways. What will the money be used for? Who are the direct and indirect beneficiaries of this money? What is the source of funds? Because we do not want to facilitate illegal transactions or where money has been obtained under wrong, in the wrong way. For example, what we call predicate offenses. For example, money from poaching or kidnapping or money laundering. We do not want to facilitate that as financial institutions. So this is a regulatory requirement, and we are required to obtain and maintain this information. There's a lot of work that goes on. Once we obtain these documents, what happens next? There's a lot more that happens on the back end, and it's all about the bank getting to know who you are as our customer. The other one that I would want to also dwell on a little is the supporting documentation for foreign currency transactions. The bank, banks are, we are all licensed foreign exchange dealers, so Forex. And we are required to ensure that for all FX, foreign currency transactions, there must be an underlying economic activity. So whenever you want to send money from Kenya, maybe to another country, and you need to have that exchange, we require you to provide supporting documentation. For example, an invoice. We also need you to provide an agreement that is going to support this. And just to mention on the large cash transactions, I needed to mention this. I know the president has said that he wishes to have this reviewed, and the Central Bank of Kenya has been directed to review that particular threshold from 10,000 USD or equivalent to some other money, to some higher threshold. And for us as financial institutions, until we are advised by our regulator, that is the time we are going to implement. So for us, we have to wait for our regulator to advise us, then we will implement all those requirements as expected. So when it comes to the foreign exchange, currency transactions, the central bank is very keen on avoiding speculative exchange of currency. And this is the reason why it says that we have to ensure that all documentation has underlying economic activity. How do you prove this underlying economic activity? You prove that by showing that you have an invoice. You prove that by showing that you have, if it is the importation of goods, the bill of lading, what are the shipping documents that have come in, just to prove that there is actually a transaction that's going on. Because you find that if there is a lot of speculation, people just exchanging currency with no underlying economic activity, you tend to see that the exchange rate tends to fluctuate. So one of the mandates of the Central Bank of Kenya is to ensure that the foreign exchange is stable. So our role as financial institutions is to ensure that all that documentation is obtained and we are able to prove why you are making that particular payment. And just to mention here, the regulation in which we use is called the FX guideline. It's a pretty outdated guideline because it was issued 2002. A lot has changed, since 20 years ago in terms of the payment landscape. And the expectation is that hopefully it is going to be updated just to reflect the current economic situation in which we are in as a country. So the next thing that I would want to touch on briefly is the Kenya Banking Sector Charter and how this impacts you as an SME. So what is a charter? So this is a commitment, from the banking sector to entrench a responsible and disciplined banking sector, where we are responsive, to the Kenya populace, And how do we do this? By ensuring that we adopt customer-centric business models. Whatever solutions we come up with are for the customer. It is not about the bank. And even now there's been a total shift in the way banks operate. We don't come up with products and then now tell people, oh, come in and take our products. But rather there's that particular shift, like a paradigm shift where it's like, we first go to the customer and ask, what do you want the bank to do for you? Then you come and tell us, I want asset financing. I want, working capital. I want, a savings account. Then we go at the back end and we try to ensure that the products that we come with are very friendly to the bank, to the customer. Then we have risk-based credit pricing. There has been a lot of, what do I say? A lot of interest in risk-based pricing. And what do we mean by risk-based pricing? And this will be especially interesting to you. What risk-based pricing is about is that when you come to the bank for a loan, so you come in, you provide the information that you've been requested for, and the bank when it's assessing your credit worthiness, it needs to look at you as an entity or as a person individually, such that no two people should get the same interest rate, or what we call the credit pricing when we walk into a bank. So there'll be a model using algorithms at the back end that come in and talk to what are these unique factors that are so unique to you. So you will be rated either as high risk, medium risk, or low risk. If you're high risk, it means that you're going to get slightly higher interest rates, but if you're low risk, it means you're going to get a lot less interest rates. Therefore, for a number of banks have been given this approval, the models in which they're using the risk-based credit pricing, they've been given approvals. And what you will find is that the interest rates, the expectation is that interest rates are going to come down. Financial institutions are not going to rely solely on Credit Reference Bureau. There's been also a lot of hullabaloo about Credit Reference Bureau. The president also promised to delist a huge chunk of people who are listed on the credit reference bureaus. And the thing is, using the risk-based credit pricing, a lot more financial information and non-financial information will be computed to tell what is your credit worthiness, for you as a customer. And then another pillar of the charter is enhanced transparency and information disclosure. What do we mean by that? All financial institutions, banks, are required to provide you with what we call a key fact statement. Whenever you open or you take on a new product by a bank, for example, a current account, a savings account, you're taking a loan, you should know what the full charge for that product is. If there's a monthly payment, the bank is required to tell you. And in fact, you're even supposed to sign that you have seen what you call the key fact statement, which tells you what the features of the products are. It tells you what the risk associated with that product. It will tell you what are the charges associated with that product. For each and every product that a bank offers, you are required to get a key fact statement. This is to create awareness and to tell you, these are the charges, are you comfortable or not comfortable with the charges that that you're getting, and then you sign. And then the complaints process. Whenever you have a complaint regarding a bank, the bank is required to display prominently the contact details for customer care. So when you go to any bank's website or you go to any branch of a bank, you're supposed to see contacts displayed very clearly, that if you have a complaint, this is the person or the number or email address in which you're supposed to ensure that your complaints are fully addressed. And then when it comes to lending, all fees are supposed to be advised to the customer. And when we talk about fees, the full list of disclosure. If you go to the KBA website, you will see a comparative. It's called the cost of credit website. You will go there and you will see all the credit, the interest rates offered by different banks. The bank is supposed to tell you, what the valuation fees are, if you're purchasing land, if you're constructing, you need to be told, if it is the quantity surveyor, all that information. So long as the bank is charging you anything, that should have been disclosed beforehand. If it is a loan, you've gone to a bank and you've requested for a loan, you are supposed to get a schedule of all the principal and interest payments that you are supposed to pay beforehand. And this is before you make your decision. And in fact, what banks we are required to do is to give you like a 14-day waiting period, cooling off. We actually call it a cooling off period, where you get the full information and then you take 14 days to decide, do I want this money that the bank is giving me or not? We have that leeway. You as the customer, you have that leeway to come back and to negotiate, on the loans that you have, depending also, of course, on your credit worthiness. And also now the third pillar is entrenching an ethical culture, just doing the right thing and ensuring, that banks do not exploit customers out there. So let's go to the next slide. So as the SME, how do we ensure that you have a seamless interaction with the institutions, with financial institutions, in this case, banks? Number one, provide requested information during account opening. So as I have said, these are regulatory requirements. It's difficult for the bank to waive them. You'll find different degrees, but at a minimum, whatever minimum information you've been requested for to provide, that should be provided. Every so often, you will find relationship managers or your bank calling you and telling you, we noticed that your profile has changed. You used to transact, I had mentioned before, 10 million, but now we see you're doing 100 million. Let's walk this journey with you. Just tell us. We want to know, is your business has grown, so how can we come in and support you, as a financial institution? So you will find that the relationship manager or the bank coming back to you every so often just to find out how your business is doing and how you're doing as we get to walk this journey together with you. In terms of supporting documentation for all transactions above USD 10,000, there is no two way about this. That supporting documentation has to be provided because we are required to retain it. And also it would help if you could reduce reliance on cash, to electronic or digital channels. Instead of going to deposit or withdraw cash, if you're able to do that using the electronic means, we're not going to ask you for as much information as we would if you're doing it in cash, if you're making your submissions, your remittances in cash. And then finally, just make sure that you ensure compliance with your regulatory requirements. For example, if you want to take a loan to construct, for example, an industry, something that is going to impact the environment, ensure that you have the proper approvals from NEMA. Or you're doing a construction, ensure you have proper approvals from the National Construction Authority, because these are some of the things that before the bank lends you money, they have to ensure that you have the proper licenses to run so that the bank can give you that money. It's part of reducing our risks. And then, so how, as banks, how have we come in to support you as the SME? KBA, we have a very good initiative, which is called the Inuka Enterprise Program. Then we have what we call the credit guarantee schemes, in which the government gives financial institutions, banks money, and then for onward lending. So you find that this money is given at much less interest rates compared to a normal bank loan. There are several banks which offer, the credit guarantee schemes, and the rates can be quite low. And it's this awareness that people are just not aware that there is money that you can get, way below what banks would ordinarily offer. If you go and ask, give me this credit guarantee scheme or the Inuka Enterprise Program, you go through some training that gives you financial literacy. We have other channels that we've come up with, like the PesaLink. So PesaLink is where you're able to send money below 1 million shillings, from one person to another. It's a lot cheaper than what mobile network operators would provide. It's a lot cheaper than PesaLink, than RTGS. So this is an initiative also of the Kenya Bankers Association, together with banks. Then credit risk pricing, so risk-based credit pricing, where we rate you as a bank. We will rate you based on your financial data and non-financial data. We understand that you may not have the financial statements as we require them. Therefore, what is this other information that we look at? We talk to your vendors, we talk to your suppliers, then we see how do we rate you. We also partner with fintechs. We have partnered with mobile network operators. We've gotten into, what we call like platform banking, where we open up our banking services to, many other fintechs. This is, the fintechs of this world, where we're just coming in with them, lending out money and ensuring that that SME is in that particular value chain. So you come in as an SME, we also bank your, for example, if it is an insurance company, it is also right there. If it's your supplier, it's right there. And the loan that we are going to give you is also going to be dependent on the creditworthiness of all these other people, these other third parties who help you do your business. Then we have financial institutions, banks. We are also expanding our product portfolio and increasing our customer outreach. So I would like to believe that this has been helpful in helping you just have a more seamless interaction with the bank whenever you're coming to, walking into the bank or using the different product channels. This has been a helpful session. So thank you very much. I can hand over to Patrick for the next session.
Thank you, Anne. I believe now we've learned about KYC. This is Know Your Customer, and we have anti-money laundering and the AML rules and the regulations and the drafts and the rules. So now we come to the end, but before we finish off, we have a few questions from the participants. Maybe could tackle a few. Let me start with Rose. And she asks, what is the common issue you find we SMEs face and we fail to comply with?
So the first thing is registration of the SME. So you find somebody's doing a business, but they're not registered. And a good thing, the regulations, there are different ways of registering. So you can come and register, a business, and then it can be trading as. And that document is so important to the bank. So this is one thing that we find. The other issue that we find that challenge SMEs is the provision of information. We do not have full information of the kind of business that you do to help us serve you better. So if this is financial information. When we ask you about your suppliers, who are these customers that you work with? If you could give us all that information, it can help us give you a good rating in terms of your credit worthiness and know the kind of business that you have. So for me, and also in terms of supporting documentation, we find a lot of pushback when the relationship manager calls you, or you walk into a branch and you're told, oh, please give this additional information. There's a lot of pushback, from customers saying, why are you asking for this information? You're intruding. So we do get a lot of pushback on that.
Okay. Maybe I would like to tell the participants who've come in late that this session is being recorded, and it's going to be available, and it's also on our Facebook page for Inuka. Again, the slides that were used by our key speaker today, Ms. Anne Mureithi from Stanbic Bank, the expert on compliance, is also going to be provided. The slides are going to be provided for reference and for you to learn how to run your business. Another question is that one from Samuel. He says that I reckon that this pricing is too mechanical and lean to rely upon in qualifying clients, biased and subjective as well. So to say the least, it has been a source of laziness to the credit officers. Let's look at frequency of transaction and repayment behavior as original basics. I think he says that maybe there is a bias on the credit officers in the banking system, where they just want now to use this pricing as the only model to actually maybe determine your interest rate. How do you think about that?
So actually, the risk-based pricing is a better model than what we had initially, because what happens is that first there's what we call the prime rate. This is the rate in which the bank looks at and says, if we lend below this value, let me give a random example, for example, 10%, where the bank says, if we lend anything less than 10%, we're going to get into a loss. So from 10%, going upwards, then what are these marginal factors that are, credit-based that would make you, now this is where the risk-based pricing comes in. And so we have, the bank has set its base rate, and then these additional factors. And it is a model. So it's not a credit officer who is going to sit back and, decide. No, they are only going to key in information, depending on your turnovers, depending on, how the kind of transactions that go through your account. Then what comes out at the end of it is that pricing, which is specific to the customer. So you find that what you as a customer A will get and customer B will get are different interest rates, because it's very specific and very personalized to that individual.
Okay, so there's two questions from Ian Onami and one from Anna Bosibori, almost the same, so can combine them. So they ask, how can I open an account without visiting the branch? And do KYC documents have to be hard copy?
So I'll give the example of Stanbic Bank. So for Stanbic Bank, if you are an individual or you are a business, you do not have to visit the bank to open an account. So we have digitized this process, and I believe there are also other banks who have done the same. So there's a number in which you key in, and I'm happy to share that number, where you just key in. Actually, it's on USSD, or you download an app. I'll give you a portal. You go in and you provide the information, and then you automatically get an account. That is number one. So you do not have to visit a bank to open an account, because many banks have digitized that. Number two, in terms of the KYC, not necessarily. We do not need physical documents. We can, because what I've said is that we verify the information that you've given us. So if it is a KRA PIN, we'll just ask you, give us your PIN number. then we will do a check. If it is your ID number, give us your ID number. We will do a check. If it is your certificate of incorporation, we will do a check and we come back. So unless there is a problem with that number, that is when we, unless the information is not proper, that's when we'll come back and we'll require you to give, hard copies of the information. But then I also need to mention, we classify clients differently. So there are clients whom we'll consider low risk from an AML perspective, anti-money laundering perspective, medium risk, and high risk. Sorry, and this is from a customer due diligence. And you find that certain customers who are considered high risk, based on a number of factors, we will require them to have a face-to-face visit. Either the relationship manager comes to you as the customer, or you visit the branch or the bank to get that service.
Okay. I have one question from Samuel. Maybe I can share that before we wrap up. Currently, the MPC is talking about the MPC yesterday and the CBRR that moved to 8.35. So he asked if does this affect the risk-based pricing?
Yes, it does. So whenever there is a change in the MPC, that straight up impacts the bank. And the reason it impacts the bank is that financial institutions are required, banks are required to maintain a particular reserve of their funds with the central bank. So that reserve is part of it is determined by the MPC rate that is shared. Therefore, that will also come in and feed into the bank's prime rate, what you call the base rate. Sorry, what you call the base rate, it does feed into it. So you will find that variation as at and when MPC makes its pronouncement.
Okay, then I think we can end there. What I can do is thank you so much, Anne, for supporting the Inuka Enterprise Program and being very productive and very good at what you've actually shared, compliance and what is regulatory and the policies that our SMEs need to actually have, so that we can actually help and to serve them better. So I think we end here, and I say thank you again. And I actually say this again for any participant that has joined late. This was a recorded session. The session recording will be shared, and then also the slides that Anne did are also going to be shared. And I have somebody who asked if Anne's content can be shared. She would like to have maybe communications with you later from here. I don't know whether you can share your email or still that the Data Protection Act, you're still using it for that. That you can tell me, then we can actually maybe share it on the chat.
Yeah, I can share my email address.
Okay.
This is Moravi A. I think I can type it in the chat.
Yeah, just type it on the chat, and maybe the participants can talk to you later.
Yes. Sorry. Let me type that again. I missed out a letter. Stanbic.com, Moravi A. So it's moravi@stanbic.com.
Thank you again. My name is Patrick Kefue, Senior Technical Services from KBA. Bye.
Thank you. Thank you very much.
Thank you.